Stock market weekly chart review for September 5th through September 9th. Let's take a look at the S&P 500, 5 ETFs of different sectors that make up the S&P 500, with our goal to begin an idea of what the overall stock market's doing by using the S&P 500 as a proxy for that. We're doing this for mainly two reasons. The first reason, whatever the stock market's doing is going to put a certain amount of pressure on an individual stock that's in the stock market. So let's say you are buying a stock or want to buy a stock because you think it's going to go up. Well, if the whole if the whole stock market is moving down, it makes it difficult for your stock to go up or go up as far as when the whole stock market is moving up. The other reason why we're doing this is because you can do this with any ETF. Let's say that you want to trade, let's say like a gold mining ETF. You're primarily going to trade this gold mining ETF. So you look at the portfolio composition of that gold mining ETF. You find out which stocks heavily make up that gold mining ETF. And then when you look at those individual stocks, what those stocks are doing, let's say if all of those stocks are moving up, then the ETF is going to move up. Let's say if all the stocks are moving down, then the ETF is going to move down. Let's say some are moving up and some are moving down, then it'll probably go kind of sideways. So you can use this information for a variety of reasons. Maybe there's a third to fifth, sixth, seventh, whatever amount of reason that I'm just not aware of at the moment. But speaking of portfolio composition, let's look at it. S&P 500 portfolio composition here at Fidelity, this screener.fidelity.com. And Fidelity is showing us that the S&P 500 is currently made up of 507 stocks. Here is a list of the top 10 holdings. Now, I don't quite remember if in last week's video, if one of these stocks were switched out. And if you want to check for yourself, there's going to be a link popping up right here that you can watch last week's video to check to see if it's the same makeup, or just to watch that video, whatever you want to do. But let's take a closer look at this top 10 stocks. We see we have Apple, Microsoft, Amazon, Tesla, Google again, Berkshire Hathaway, United Health Group, Johnson & Johnson, and here is a recent addition, ExxonMobil. I forgot the stock that ExxonMobil replaced, but it was a technology stock, because there used to be 7 out of 10 of the top 10 were technology. Now we're at 1, 2, 3, 4, 5, 6. That's it, 6. So that's another reason why it's good to be frequently checking this stuff, because things change. Now here's the sector exposure. We know, we being me and people that have been watching these videos, we know that this one right here is doubled up. Real estate. Why is that? Why is that twice? I don't know. Is that some sort of fluke? I don't know. It used to be financials right here, with information technology being the top, a little less than 28%. I think that's down a little bit. Healthcare, a little over 14. Consumer discretionary, almost 11.5. Real estate, is it real estate or is it financials? I don't know. Is this the financials? I don't know. So we're going to look at real estate and the financials, but real estate at allegedly real estate at 10.81, and that's where we're gonna draw the line there and still look at financials. So for each of these sectors, I have correlating ETF. So XLK is technology ETF. XLV is healthcare ETF. XLY is consumer discretionary ETF. XLRE is real estate, and XLF is financials. So we'll look at those. We're also going to look at that risk indicator. At the end of this video, we'll look at that risk indicator that we started looking at last week. And I'm going to add something new for you. This is a different type of chart, and we will do that in conjunction with when we're looking at these. So without further ado, let's get into it. So we're looking at a weekly chart. So each one of these red or green candlesticks, bars, whatever you want to call them, those represent 1 week of trading, right? So if it's a 5-day trading week, then 5 days of trading action is in there. And we are on the 2-year time frame at the moment. Down here, this stuff is volume. This red line is a 200-day moving average. This bluish line is a 50-day moving average. And I added a 20-day moving average in this lavender purple color. So these moving averages are on average of the last X amount of days, of the close of X amount of days to get this line. What they definitely 100% work well for is a quick visual indication of trends or what's going on. So for example, quick visual indication, 200-day moving average, moving up, not super steep, but it's moving up, right? That's a bit of an incline. So that shows us that there's an uptrend. Now we see the 50-day moving average started dipping down here. We see the 20-day moving average, which is the short-term trend, right? Short-term at 20 days, mid-term at 50, long-term at 200. We see our short-term trend has taken a dive recently, somewhat of a steep dive. And so we're going to add that so we can look at those three. So 20, 50, and 100. Let's zoom in. Before we zoom in, let's look at our volume. Okay, compared to the last 2 weeks, volume was down a little bit. Compared to last week, it was down quite a bit. But look over here, volume's sort of, in line. It's not like, yeah, there's been spikes in volume, but when we look over here and here, this is not really like, it's not low volume. Look at this over here. That stands out as low volume, but maybe it was in conjunction over there. So anyways, we got our volume there, and volume is kind of like energy for movement or gas or something like that. You see, when at the beginning of the week, if you're getting a lot of volume, or the beginning of the day, if you're getting a lot of volume at the beginning, then there's probably going to be some follow through with that price movement. Zooming in instead of talking, what do we have? So we see our candle opened here and it closed up here, traded down here. We see that this 390 mark, which when you're doing this stuff, you can look to the left and see where prices get kind of clumpy together. For example, this was clean, right? But once it got here, it started getting kind of clumpy, and here, right? This is kind of clean right here. We'll see what's going to happen here. But when we look to the left, we see that it's hitting this mark that if it's above it, and it's not exactly 390 right on the dot, it's a little bit of a range. When it gets in this area, if it's on top of this area, it tends to act as support, right? And then when it's below it, it tends to act as resistance. But obviously, it can break through. So let's see what's going to happen this week. But we're kind of right close above that 20-day moving average. And one thing that we want to be looking for this week, or this coming week, at the end of the week, are we getting close to this 420 mark? Are we remaking this lost ground? Right in here, we want to see our price is gonna get up in there, and then maybe they do, and then we want to see what's it gonna do around this 50-day moving average. Now, what's nice about this is we're above the 200-day moving average, which when when you're above or below one of these moving averages, it can act as support or resistance on either side. Technology stocks. All right. Volume was sort of, a little lower. If you look back here at these other days, volume, other weeks, volume was a little lower and above the 200-day moving average. Opened and closed below that 20-day moving average. Got right to it though, pretty darn close. So maybe this week it's going to be busting through there. We'll see. It's still hasn't taken out this big candle. And when we look to the left, we see that same thing. It's kind of in the stuck sort of zone here, acting maybe as some support for it. But same thing with these technology stocks. We want to be looking to see how quickly it's going to be regaining this and what's going to happen at the 200-day moving average. Forgot I wanted to bring this up for you. So this chart is different than this one, right? So this, if it's red or green, it's based on where the candle opened and closed. So this is green because it opened here and closed here. This is red because it opened here and closed here. So when it closes lower than it opens, it's red. When it closes higher than it opens, it's green. It's a quick way. You look at it, you automatically know it opened higher or lower than it closed. With this chart, these colors have nothing to do with the candle opening and closing. This particular chart is color coded based on money flowing in or money flowing out. So right now we see with the S&P 500 that look up here at this date, that starting on September 2nd, enough money was flowing out to trigger this to turn from green to red, right? And if money starts flowing in, when enough money starts flowing in, it'll kind of trigger this yellow, and then if enough money keeps flowing in, it'll go back to green. But right now it's red. It could stay red. It could go to yellow. But let's just look at that for red. And this is a stochastic. It's a weekly stochastic. So it's showing a longer term trend, like we're looking at. And we see that the red, when the red is over yellow, it's generally moving up, like you see here. And then when red is under yellow, it's moving down, like you see here. So now our red is under yellow, but look at how this is sort of starting to ease out a little bit. We're using this a little less for the stochastic, although that's a nice little reference point. But I really want you to see this money flow, that right now money is flowing out. And so now let's look at technology, same thing. All right, money is flowing out. Healthcare. We see our healthcare volume kind of even. We got about an average amount of volume going on, less volume than last week, but even for about a month's worth. Definitely above the 200-day. Let's zoom in to get a better look. Looking to the left, we see this $125 mark seems to be something significant to the healthcare sector or this ETF, because every time it's getting there, it's like it'll touch it, it'll kind of test it, but here it broke below, but it kind of bounced back up really quickly. So same thing, it came down here, touched that 125 point, and then this week really rallied up to close above that 20-day moving average, almost regaining all this back and getting close to that 50-day moving average. And when we look at, is money flowing in or money flowing out? Okay, money right now is still flowing out, but our trend is starting to turn up. And if this keeps moving up, if this keeps moving up, maybe it's going to turn yellow, or maybe it'll automatically turn green. Now, one thing that I've heard about healthcare is that money is flowing out of technology and it's going into healthcare. Is that a fact? I don't know if it's a fact. It's just something that I heard someone say. So right now, out of these three, this is one's definitely looking probably the most bullish at the moment. Consumer discretionary. Okay, volume. We had a good amount of volume. Look at that. Where here's kind of our average for a little bit over a month. Last week's volume was high. That is barely below last week's volume. See, we're above that 200-day moving average. And let's zoom in a bit on that. Opened here, closed here. Really, look at that. In 1 week, regained almost 2 weeks of dropping prices. Closed significantly above this 20-day moving average. And our next kind of testing point is going to be in here, the 170, and then we have to see, as I mentioned, a lot of times it's in this range, right? So maybe this 170, 175, we'll have to see what happens in that range. Real estate, same thing. We got a pretty good volume compared to last whatever X amount of weeks, but a little less than last week, above that 200-day moving average. And we see basically kind of went sideways. Look at this for 1 week. Okay, last week prices dropped down here. This week prices are back up here. And basically we closed this week where on the tail end of this bear candle here. I get it, it's a little bit higher than last week, but it's just like whatever, chump change, right? It's not even I think it's a dollar difference, like whatever, 25 cents or something like that. So it kind of just gone sideways. Prices went down, prices went up, which is great for, you know, swing trades in there. And so we'll have to look at that, see what's happening. And then our financials, decent amount of volume, similar to the two previous, the real estate and the consumer discretionary, above that 200-day. 200-day moving up, but sort of moving up at a slow pace. You can zoom in here. Similar, right? We made up about 2 weeks of dropping prices with almost 1 week. So that's looking pretty good. Prices did trade as low down here, but buying really brought it up here. Started the week below the 20-day moving average, ended the week above it. We'll have to see what's going to happen around this $35 price point and at that 50-day moving average. Consumer discretionary, money is flowing out of. Real estate, money is flowing out of. Banks, money is flowing out of. So what's our prognocation? What's our prognocation? What do I think might happen with the S&P 500 this next coming week? I think that it's possible that we could be. Well, I do not want to eliminate the fact that prices could just drop next week, right? So that's definitely on the table. Prices could just drop next week. However, overall, things are looking in a bit of a short-term bullish, right? So I think it's possible that we could see the S&P 500 keep moving up to, I don't know if it's necessarily going to move up to test this 50-day moving average, but I think we could, if I was going to place a directional trade, if I had to, if I was forced to, I would speculate on it moving up more than down. However, what I'm personally doing is I'm waiting to see what's going to happen. So even though I think that the chances are it's going to continue to move up, there is a possibility that there could be a lot of selling come in, because as we saw, all of these sectors that make up the most of the S&P 500, it's all red, even though some of them are turning up. And when we look at this risk indicator, it closed the week at 224.8, which over, we see it's kind of been moving up at a slow rate, right? But here's the thing to really keep in mind about this, right? Even though it's moving up, sort of, it seems to be going sideways. You know, I only started charting it back here in August 29th. I forget exactly, a year ago or so. It used to be down here in the green. So in this spectrum of risk, 50 to over 300, we're definitely in the high range of risk. So next week, you know, is it possible that some selling could just pour in? It's possible, but I do think it's likely that that we might be building some lower high, and maybe another, low, higher low, maybe another higher low somewhere in there, maybe get up there. Who knows for sure? But that would be that's my speculation. Now, what as traders, what could we be looking to do with this information? Well, what has been working for me and continuing to work for me is I still have calls expiring worthless. So I'm still selling covered calls when they expire, putting more on. How far away from the money where the stock is currently trading and for what time varies depending on which particular stocks that I'm selling them on. So my covered calls are working pretty well. Although you know, when things are short-term, potentially short-term rallying up, maybe going to take a change and start going to the upside, I'm getting a little cautious with that. Cash secured put options are still working well for me. I've still been selling them significantly, like basically as far away as I can possibly sell them and still make some premium at a price that that I would love to get filled on. And those really started working well because you know, the stock market started moving up. So those are losing value very rapidly. Those are working. And what I'm personally looking to do for directional trades is in some cases I'm adding to certain stocks that I want to hold for a long time. And this week I'm going to be adding some long positions, just buying the stock without selling cash secured put options, mainly because the strike prices and the premiums just don't really match up, and I want to accumulate more of these particular shares of a couple stocks. So that I'm looking to do. And the other thing I'm really watching for is, even though we got a low, we got a higher low, are we going to build another higher low? You know, that same thing kind of happened here, right? Happened here, came back down. Is it gonna do that? Are we ultimately gonna be experiencing high, lower high, lower high? Is that what's going to be happening? So for directional trades, I'm kind of waiting to see what's going to happen that way. With two different stocks I'm watching to put directional trades on, and if I can find a good opportunity this week, I will. What I think you should do, and this is advice, what I think you should do is go to ihavesuccess.com. If you want to find out more about me, click this mission part. You can read the mission of I Have Success, and you can read about my trading journey. It's been like a 15-year trading journey, so that's an abbreviated part of it. But more importantly, download some stuff for free. Download some of it, download all of it, whatever. Take what you can use. And the last thing that I'm going to suggest that you do, if you're not already, get a simulated trading account. Get a simulated trading account. Even if you have a real trading account, get a simulated trading account. So that way you can practice stuff. Some people say, oh, I don't want to do that. It's not real money. It's not real emotion. That's true. That's true. Now, if that there is truth to that, right? So if you feel that way, what I want you to do is go fight somebody without practicing, without sparring, no hitting bags, nothing like that. Just walk up to somebody and start fighting them. And if you think that that's the best way to learn how to fight, is just constantly getting in fights. Now, there's a lot of value to it. If you're constantly getting in street fights, you will learn how to fight. At some point, you might get beat up quite a bit. Could you learn how to fight by punching bags and doing some sparring? Yeah, probably, right? So that way when you walk up to people in the middle of a shopping center and you start getting in your street fights, maybe you'd have a little better idea of what you're doing since you had some practice in a non-real emotion situation. So if you think this whole idea of paper trading, simulated trading, just bogus because there's no emotion, then prove that that's true in the fighting world. Prove that that's true in any sports world. You ever heard of scrimmages? So to some degree, you got to kind of slap the silliness out of that. Get yourself a paper trading account, practice some trades, try to learn something more advanced. And that is my advice for you. You guys have a fantastic week. I know you're going to. I know I'm going to. And I'll see you next time. Bye-bye.